Hey, what is going on? In this video, we're going to be taking a look at Polkadot's coin. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, I do want to mention that I have two donation links down below in the description. If you want to support Ukraine, you can do so by going over to the official websites. If you can't do that or you don't want to, that's totally fine. So thank you all for supporting the channel. Let's get on with the video. So jumping into the weekly chart, we are on Binance's chart through TradingView. Okay, and I'm going to remove this Fib retracement just for now. And as you can see, we are in this large falling wedge and we are very, very near the apex of the pattern. So potentially if we see a dip in September and we see a massive capitulation, hopefully we don't see the July low lost, which is slightly below $6.50. So if we see a massive capitulation, the low would potentially be the support of the falling wedge because we have back tested that time in and time out. So I would target this low here, honestly, but it all depends on Bitcoin, depends on the news, depends on how the FOMC meeting goes on September 21st. If we get more FUD, then markets could drop even stronger. Like I said, and like I have been saying for the past couple of weeks, the ETH smurge, which has already, affected the markets, the CPI data and the FOMC meeting, all of those things can affect the markets in a negative way. And that's exactly what happened. So you could have had multiple swing trades and pretty good ones at that. And you also have good buying opportunities right now. So I do have Polkadot and I'm currently dollar cost averaging into it again. If you would like to get all of my trade alerts, they're going to be in the Patreon along with my podcast, low cap gem calls, your project reviews, your technical analysis and video requests. All of that is going to be there. Lots of exclusive content for you guys, and it's a great way to support the channel. So it's a win-win situation. And if I start zooming in a bit here, okay, you can see that we're coming back down into this buy zone anywhere from $6.77 all the way down to $6.44. And as you can see, this is what we retested during the summer. We even had a wick below that. So almost, what's the bottom here? So $6 on the dot is the low here. So you don't want to be losing this low, guys. I'm telling you, if you start losing this crucial key support level, then that is going to be negative, and that is going to potentially be the prelude to a further collapse in the price of altcoins and in the price of a higher cap like Polkadot. That would be very negative. So I don't envision that, to be honest with you, because everything has been thrown at the crypto markets in the past year. Tesla not accepting Bitcoin, China's ban on crypto for the 61st time, and we have all sorts of bearish news coming in left and right, and Bitcoin's still sitting at $20,000. So that's going to tell you something. And right now, the bearish news are having less and less effect on the markets because people are already getting a bit too tired of the bearish news. And at some point, the markets are going to have to reverse and we're going to enter the bull market. Now, I don't know when that is going to be. Probably closer towards the next halving, which will be happening at the beginning of 2024. So we still have quite a bit of time before that, and I'm definitely going to be making videos until that point, obviously, and I'm going to be dollar cost averaging into my favorite projects up until that point because the gains potential is incredible, guys. If you want real life-changing money, you have to be studying, you have to be learning all of this stuff, and you have to be very smart with your finances and how you distribute your money across the different financial markets. So yeah, just a bit of a tangent there. I do apologize. So like I said, once we get closer and closer to the apex, you see if we get into the apex in October, somewhere in November, we could see a strong breakout towards the end of November and December, just like we have seen for the past couple of years. And we could see a lower high here and we could come back down, right? Because you do have a high here, you have a lower high here. Potentially, we could even print a lower high getting towards $6 if we see a move all the way down to $5.14, which is the low of the support of the pattern. But all of this is speculation, but one thing you should keep in mind is that the closer you are to the apex, the more chances you have of breaking to the upside. And once you're breaking multi-month diagonal resistance trend lines, just remember this, you do tend to get strong impulsive moves to the upside. So trying to swing trade as you're breaking out of here would be very foolish and very dangerous. You could make money, obviously, if you're leveraging. Of course, that's a whole different story. I don't do that because I want to keep my money. And yeah, if you're doing a 15x leverage, then you're going to probably lose your money. But this resistance here is from November of 2021, April 2022. We haven't retested it in August, but potentially we're going to do that in October. So be on the lookout for the breakout of this major resistance trend line. Obviously, the 20 EMA and the 55 EMA on the weekly charts are very important levels as well to keep in mind. Now, that is regarding the weekly chart. And let's switch over to the daily here real quick and take a look at what's happening on the daily RSI. So as you can see, you have your buy zone anywhere from 28.2 all the way up to 32 on the index. That is your buy zone. The last time we back tested this was back in June, and since then we have seen a nice move towards the upside. So, and we have this sort of middle level here. As you can see, we have run into this level since December last year, once, 2, 3, 4, 5 times, had a fake out above it in March, obviously. Then we ran into this level 6, 7 times total. So this is a major resistance level. And as you can see here in September, we ran into it once again, but we managed to get rejected from the top of the box here, and we dropped all the way back down. So potentially coming back and retesting this zone here in the oversold would be something that I am expecting with another Bitcoin move towards the downside after the FOMC meeting on September 21st. So don't go all in, obviously. Don't go all in right now. Don't go all in after the potential drop on the September 21st, because there is always going to be another bearish event, another black swan event waiting around the corner to surprise everyone. So always be ready with cash and always be ready for both outcomes. Now let's switch over to the Binance website. Switching over to the monthly chart, I do want to bring out the 20 EMA here. So the 20 EMA is currently sitting at $16, around about that price. So from where we are right now, that is a nice 120% trade. And as you can see, the volatility is very low right now, and you're basically starting to accumulate here, right? You're accumulating, and you're going to see another break to the upside, right? Because you had this move to the downside from here, right? You back test this level, right? You had this high, you back test it over here. From there, you continue up. Really, if you look at it on the monthly and the weekly chart, it's not that bad, right? You have to zoom out. You have to zoom out, because if you keep getting stuck on the daily, 12-hourly, and 4-hourly charts, you're going to lose the sight. You're going to lose the sight of the bigger picture, and you don't want to do that, because crypto is all about the big picture stuff. If you're in here to make your $50 per day and buy some stupid crap on that and just leave, well, that's up to you. But if you're here to make money for the future, to make money to buy a house, then you have to be investing in the future. So yeah, on the daily chart, as you can see, the stochastic is very near the oversold, so I would say that is a good dollar cost averaging opportunity. The MACD is printing a bearish cross, so usually after we get these bearish crosses, confirmations on the MACD, we typically see more moves to the downside. So as you can see, the last one was here in August, on August 15th to be exact, and we saw a huge dump afterwards. So potentially there is a chance we see the same after the FOMC meeting, but just keep in mind that based on the price action, you are literally on the bottom levels here. Literally on the bottom levels, guys. You're sitting at $7 while the bottom was $6. How much lower do you want this price to go? How much lower do you want it to go? Look at this. How much lower? If you even want to take profits at the previous all-time high, which I think is a great price, right, to take profits at, but I'm going to be holding up until at least $100. So let's just slap on the Fibonacci retracement here just to see what are the targets for the future. So this is our swing low potentially, right? Let's assume that the July bottom was the bottom of the bear market, and the swing high is going to be the high that we printed in November. We get our 1.618 target here at $222, guys. $222. That is a juicy price in my opinion, especially if you're dollar cost averaging right now like I'm doing. That's a 3,000% move. Okay, so I think that is doable. I honestly think that is doable, and yeah, it's just a matter of waiting. So thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon to get more exclusive content like technical analysis reviews and video requests, podcasts, low cap gems, trade alerts, all of that. I'm doing daily updates in there, so make sure to check that out. And yeah, that's pretty much it. Thank you for watching. I'm going to catch you in the next one. Goodbye and good night.